This is Eric Mother with Mother.com, February 10th, 2021. Let's take a look at Tesla here, down about 4%. And I'm beginning to wonder, as the market did record intraday all-time highs today, that there's a possibility that this instrument might be beginning to crack. So let me pose the question. Is Tesla done? Is this massive rally over? It's a huge question. Now remember, we are discussing this after an incredible run. I mean, impressive. Impressive. Amazing. Once in a generation. So the question becomes, is it done? Well, let me discuss what I think are the levels to watch. So number one, we can see here from this 2-year weekly chart that there's a weekly closing high right there. And this happens to be at 880.02. Now, one thing that we should actually start putting a lot of emphasis on is over the last 3 weeks, there has been an effort to break out above this number. And over the last 3 weeks, all of those breakouts have failed. And now we can say that it is actually starting to moving farther and farther away from that breakout level. This in itself, in my opinion, is by itself, in itself, a red flag. So, this being the case, we start looking for other reasons why these things could fail. So we know that failed breakouts are notorious for taking markets lower. Something else developing this very week is as it pulls back, we can see the RSI now could be moving below 69.1. And as it moves away from 69.1, that means momentum is going to be coming out of the stock. But there's also another line on this 2-year weekly chart, and this line might be a good gauge. Take a look at this RSI lows line from 2019, connecting the lows of early right here, double bottom lows of March 2020, double bottom lows here of November 2020. And I think that over time, this is a level to watch, because cracking below this would suggest that this instrument is due for a substantial sell-off. I should say, in my opinion, initial price target is here at 450, which is that breakout. At some point, that breakout is going to be tested. That would be my initial price target. But I suspect that if the general market decides it needs a massive break, this instrument is going to go back to, let's say, below 200 and way below that. So initial price target will be 450. And I think if the market is due for a substantial bear market, this thing goes sub 200, sub 100 in the months and years ahead. But for now, before that can happen, it has to break this first and foremost before it can invite lower prices. Now, if we take a look at the daily, we can see that this level here, based on the daily closing high right there, we can see that this level as in itself turned into failed daily breakouts here over the, again, this is pretty much capturing what the weekly chart was showing. Over the last 3 weeks, the stock has been unable to break out successfully. So that in itself is a red flag. And we can also see that there was an improvement in prices slightly here. But this came with declining RSI strength. That's negative divergence. And on the daily, there's this RSI lows line. And you can see it is essentially coming back to test that line. If the instrument is to stabilize around here, it would need to hold this area and bounce. Otherwise, those looking for a sell signal would be looking to see whether it breaks below that line and stays below RSI 50 for a massive sell-off to ensue. Let me give you a price level to watch. It is this recent daily closing low right there, beginning of February, and that number is 793.53. I would say a break below that level would be a major tell that this instrument is due for a strong push to the downside. And potentially these highs here are generational highs that might last in the stock for another 3 years, 5 years, 10 years, 20 years, depending on how things go. So I would say this here is a level to watch. If it breaks below that level, that would also match up with the method I call 2 wrongs method. Links are going to be in the educational link in my paid website. But at any rate, watching this is the key in the short term. Above that, things are okay. Below that, it might start getting very slippery to the downside. Cracking around here would mean the 200-day moving average would have to be tested at some point, maybe even a violation below that. And guys, remember, this is because we've come from this is a massive move. This is a monthly massive move. And of course, now you start looking for the potential for this to come to an end. This is Eric Muadhi with Muadhi.com. Love, light, love. Namaste.